Hey guys, Tesla Groupie here. Okay, so I'm semi-new to making videos on YouTube, so I don't have a fancy setup or fancy camera or microphone or studio, but what I do have is some information I'd like to share with you on the wheel strategy. So I already made a video about selling cash secured puts. That's the first step in the wheel strategy. I'll link that video in the description. Some people may argue with me and say that they prefer to buy shares outright and start selling covered calls. And that's fine as well. But my strategy is to just continue selling cash secured puts over and over again until I eventually get assigned, collecting premium along the way and getting the shares for the price that I pick. Again, I will post that video and you can learn how to do that. Some people never get assigned shares. They just continue selling cash secured puts and collecting premium. So there's nothing wrong with that. But once you do end up assigned, the next step is selling covered calls. So my strategy is, first I pick my stocks or ETFs that I want to trade. I normally do not sell covered calls against my long-term positions because I don't want to lose those shares. I want to hold them forever. Some people do, and they'll sell them way out, expiration way out, or really low delta, so there's a less chance of being assigned. But I keep my long-term holds in a separate portfolio, and I really don't look at them unless I'm wanting to just check in on things, buy some things, whatever, see how things are performing, but not to actively trade. So I usually will pick ETFs to trade. There's plenty of 2x leveraged ETFs with they follow the underlying stock. So if you're like a Tesla bull, you could trade TSLL, AMDL for AMD, NVDL for NVIDIA, so on and so forth. That kind of helps you receive a little more premium, and the stock or the ETF moves a little faster. Makes it a little more interesting and helps you make a little more money. None of those are good for long-term holds. So when you get assigned, that's when it's time to start selling covered calls. Keep the wheel turning and continuously making money on these shares. Make sure you know the difference in trading and investing. You can do both, but you don't want to mix the two, in my opinion. So actively selling covered calls against my shares is how I make a consistent income while I hold this position, waiting to sell at the price that I'm comfortable selling the shares at. So let's say I get assigned 100 shares of TSLL at $10. And I want to sell those around $12, and I want to make a $200 profit on that trade. I will then sell a $12 covered call against my shares. I will get paid a premium up front for that. Think about it like this. You're the person on the other side of the person buying the call. So, when you buy a call, you pay for it. Okay, so when someone else buys the call, they're paying you for it. You are the seller. So let's say I own those 100 shares of TSLL at $100. I want to sell them at $12. 100 shares of them at $12. That's a $200 profit. I then look for my strike and expiration. So my strike would be sell a call, $12 strike, and then I pick my expiration. Usually I will go out 3 to 6 weeks because that's how I'm going to receive max premium. I will then sell a covered call, collect the premium. So let's say someone is willing to pay me $50 for that contract. Well, I make $50 up front. So I have $50, I have sold the contract, and now I just wait. A lot of people I could buy the contract back. A lot of people do that at like 80% so that they can make their money, buy the contract back, close it out, and sell a new one. Or you can just let it ride out till expiration and not even look at it because it's a win-win situation. The only time you may regret it is if TSLL, let's say, runs to $15. You still have to sell your 100 shares at $12. So you do want to keep that in mind. Also, you only want to sell covered calls against half of your position. I'm going to give you a example that happened just this week. This is recorded mid-September. So I had 2,900 shares of TSLL at $12 a share. I say never ever sell covered calls against your full position because you don't know when your stock is going to run up. There's no way to ever know. Sometimes it has nothing to do with the market. Sometimes it even has nothing to do with the stock. In this case, it ran up today because Elon and Trump sat next to each other at Charlie Kirk's memorial yesterday. Had nothing to do with the stock market and nothing to do with the stock. So you don't know when something like that is going to happen. So when you sell a covered call, you are capping your profits. You're saying this is what I'll sell it at, but if it runs up further, you have to sell it or you have to roll it. And in this case, it ran up so much and so fast that it wouldn't even be worth rolling. It would be worth letting the shares go and then maybe selling another cash secured put, or maybe waiting for the market to turn red again, or just going into a different ETF altogether. So just always remember that. So in my case, the last 2 weeks, I had sold covered calls against half my position, and I have lost half of my position, almost. I had 2,900 shares. Now I've got 1,300 shares because I've had so many called away due to this run up. Now, I made a great profit on those. I'm not complaining. I did end up having to sell quite a few at 16, and then I had to sell some at 20. And that's okay. Again, my share cost basis was $12. But the plus side is I still have 1,300 shares to trade with. I can sell covered calls against half of those, which is my plan. Or I could just hold a little longer and see how much further we go up, because we are in a strong market right now. So my plan with these 1,300 is to go ahead and sell about 6 more covered calls. But at this point, I can go way higher than $16 or $20 because we're trading at 21. So I will sell probably $25 covered calls. Again, if I lose those shares, that's okay, because I have them at a cost basis of $12. So don't ever sell covered calls against your full position of a stock that you feel like is going to run up. I cannot stress enough that will cap your profits, and you will be upset when the stock runs up and you have to sell all of your shares. So, although it's a good way to make passive income, it can also cap your profits and hurt you if you don't do it correctly. So that's my way of selling covered calls after being assigned shares from a cash secured put. The ETFs that I am currently trading is still TSLL, just covered calls. And AMDL, I'm selling cash secured puts because I do feel like AMD still has room to run. NVDL is way too high. Although NVIDIA is a great stock and it's got more room to run, I just don't think that it's in a price range where it's good to be assigned shares. I also like TQQQ when it drops again. Right now, it's just too high. SOXL as well. So subscribe to me. Please give me a thumbs up, and I will continue making videos like this, short, sweet, to the point, and hopefully you learn something. Thanks so much.